Hey there, welcome to another episode of The Block Crunch, the podcast where we talk to investors, entrepreneurs, and builders in the crypto space for 20 minutes every week. I'm your host, Jason Choi, and this week my guest host, David, will be talking to Nick Tomaino of 1confirmation. Nick is the founder and general partner at 1confirmation, an early-stage crypto fund focused on the decentralization of web and society. Previously, he was a principal at venture capital fund Runa Capital, and before that, he was working on business development at Coinbase, which is arguably one of the most important crypto companies in this space today. So Nick naturally is a perfect person to talk to with regards to how one can grow and start a career in crypto. So if you're interested in diving professionally into this space, then definitely listen to what Nick has to say when it comes to knowing when to make the jump. And also, Nick will be talking about his investment criteria when it comes to different types of crypto assets or crypto ventures. Specifically, he'll be talking about the 4 things that he looks at when making an investment. So definitely pay attention there as well. So, without further ado, let's buckle up and dive right in.
This is a worldwide phenomenon.
If you could start out by just telling us a bit about yourself and how you ended up in the world of tech and also specifically cryptocurrencies and the blockchain.
Sure. I grew up in the northeast of the U.S. In a town called Gloucester outside of Boston, Massachusetts, and had a pretty typical upper middle class childhood. But at some point, I became a bit disillusioned with the adoration for institutions that exists in the Northeast in the United States and most of the United States, to be honest. And so I view tech as kind of the ultimate equalizer and was attracted to it early on because I've always been a fan of underdogs and distrust institutions that most people blindly follow. And that was kind of how I first got attracted to tech, I would say.
And how about for cryptocurrencies? Like, when did you first hear about it and what got you interested in diving in and learning more about the space?
I fell down the Bitcoin rabbit hole that I'm sure you've heard many people talk about in 2012. And I first read a Wired article that was talking about this magic internet money that was being used to buy guns and drugs on Silk Road, which was kind of the early narrative. And I've always been an online community person. So the first thing that I did when I learned about Bitcoin was dove into the online forums around Bitcoin. And at that time, it was Bitcoin Talk and it was r/Bitcoin, which were the two kind of main online forums around Bitcoin. And when I dove into these forums, what I found was there was this community of people from around the world, weren't connected by physical location, but were connected by kind of a shared value system as well as economic incentives, meaning that most of these people kind of owned Bitcoin. And I thought that community kind of aspect of cryptocurrencies was super interesting and exciting, and kind of the social aspect of crypto, I would say, was kind of the hook that kept me down the rabbit hole. And basically in 2013 decided that I wanted to work in the space, in the Bitcoin space, and basically reached out to every entrepreneur in the space that I could think of and talk to that was working on something. And that's kind of how I went about it.
And so what would you say were some of the biggest lessons you learned from your time at Coinbase?
I would say 2 major ones. One is that startups are really hard, and it's only worth being involved in a startup if you're really passionate about the mission. So Coinbase has been massively successful and had huge macro tailwinds behind it that any startup would kill to have. And even so, it was incredibly hard, and there were various times where it would have been easy to give up if I weren't passionate about the mission. And so that's, for any entrepreneur building or someone that's interested in getting into startups, I think that is the single most important thing. And having an early team at Coinbase that was really passionate about the mission was really critical to the longer term success of the company. So that's one kind of takeaway, I would say. Another is that a startup success, I think, is really dependent on two things: a great team and great product timing. I think a lot of people say that it's all about great team, and having a great team is certainly important. But I think there's a lot of great teams, and I think at Coinbase, kind of we benefited from a great team, but also incredible product timing, and so that's another kind of takeaway I think that I think about a lot now as an investor is is a great team, but also is it incredible product timing, and the product timing kind of assessment is really hard to do as both an entrepreneur and an investor, but I think the best entrepreneurs and investors are really good at that, at assessing kind of product timing.
What would you say allowed Coinbase to kind of like become one of the top blockchain like Bitcoin companies and one of the most known like dealerships versus like all the other companies that were started around that time as well?
Back in 2012, 2013, there were a fair amount of crypto companies. At this time, it was just Bitcoin. There weren't other cryptocurrencies, but I spent a lot of time talking to a lot of founders, and most of them weren't people that like I would have worked with outside the context of Bitcoin. They were, smart, interesting people, but really not as thoughtful about building something for the long term as I would have liked to have seen, right? And so I think Coinbase, the Coinbase founders were the first people I met that I actually probably would have worked with, outside the context of Bitcoin. And I think early on they were thoughtful about building a strong brand, about regulatory compliance, and about security, and getting those three things right allowed Coinbase to kind of emerge as the trusted brand for people that want to, buy and sell in the early days Bitcoin and now cryptocurrencies broadly. So I think kind of a focus on those three things kind of really served us well.
And so in terms of your decision, though, to go into venture, joining Runa Capital, and then eventually starting your own venture fund, how do you know that the time was right for you to go back to venture? And then also, like, how do you know it's like time to like start your own like venture fund?
I'm much more of a startup person than a kind of big company person. And I think for me, Coinbase got to a size that was kind of beyond what I enjoy and also where I thrive. And so I kind of always wanted to do my own venture fund. And I kind of thought that was kind of at the intersection at both what I enjoy doing and what I'm really good at. And so I joined Runa while also kind of working on two crypto-related side projects. I founded The Control, which is an email newsletter and blog where I write about the space, as well as Token Summit, which is an event that I co-founded that brings together a lot of kind of the best entrepreneurs and investors in the space. And so, working at Runa kind of gave me a good perspective on venture, and doing the side projects kind of kept me deep in crypto. And then ultimately kind of the market timing kind of told me that, the time was right to do my own thing. Basically, there were a lot more people, asking me about cryptocurrencies from kind of the traditional venture world, and people that I've worked with in the past even kind of pushing me to do my own thing. And that's kind of what gave me the confidence to go out and raise money and start my own fund.
Yeah, I'm a huge fan of the Token Summit. I've watched a lot of your videos on YouTube. I'm curious, though, why the focus on like venture investing versus not like structuring it like a hedge fund. We're seeing a lot of other players doing the hedge fund route given the liquidity and like the volatility as well. I'm curious, like, what your like thoughts were and forming your thesis around your venture fund.
I think the crypto venture fund model is generally a bad model, but it kind of took off early. Crypto venture funds became a meme that sounds interesting, and now there's 100 plus crypto venture funds, right? So the reason that I think it's a bad structure is, for the most part, what these funds are doing is buying and holding crypto assets that have kind of asymmetric risk return. So they're, even like Ether and Bitcoin, I think still are kind of have venture-like risk return profile. And most of these funds aren't doing short-term trading or generating alpha on an annual basis, but they are charging a hedge fund fee structure, which is a management fee plus carry annually. And so the hedge fund model is a great model if you're a GP that's able to raise a bunch of capital and and have good returns. But there's kind of this asymmetry in fee structure between the GP and the LP. Meaning, if I'm $100 million crypto hedge fund that's up 100% in year one, and I'm getting 20% carry, that's $20 million in my pocket as the GP, without any returns to the LPs. And so that works great. Everyone's happy when the market's up, but when the market's down, that becomes very bad for LPs, because you have GPs that have made a bunch of money, and you could have potentially LPs that actually end up losing money. And so I've always felt that the venture kind of model of long-term 9-year life of the fund, and carry only paid out when the LPs are in the profit, just made a lot more sense. And so that's kind of why I've structured 1confirmation the way I have. It allows me to take a long-term focus, to not be worried about drawdowns or withdrawal redemptions or things like that, and focus on kind of what I think I'm best at, which is kind of identifying opportunities very early and identifying great entrepreneurs early and taking a long-term perspective. Like, I'm not a trader. That's not really my skill set or what I'm good at. And so structuring it as a venture fund allows me to kind of, I think, focus on what I'm good at.
So I'm curious then, like, specifically for the space that you're in, like, what are the things that you look for aside from like the common things that most VCs look for? Are there specific things, because like you're investing in these like blockchain based and like crypto focused like startup?
Yeah, I evaluate every project based on kind of 4 characteristics. The first 2, I would say, are similar to that of any kind of venture investor. So it's team and it's product. So how I think about team is, is it a passioner is it a entrepreneur that's very passionate and mission driven? Do they have technical chops? I think that's important. Given the stage that we're in, kind of in crypto, are they inclusive and kind of objective and capable of fostering a healthy long-term community? And that's actually something that is maybe a little different than traditional startups, because all of these token-based projects are kind of open source projects where there's a lot of transparency and everything is happening kind of out in the open, which is different than, an application like Uber, right, where you could just build a really great product for people and not be very transparent or care about community very much and have a ton of success. So I think like Ethereum is the best example of this. Is like, Ethereum, made some really interesting technological breakthroughs, and a Turing complete scripting language is very interesting from a technology perspective, and that's part of the reason that it's had so much success. But I think another reason is Vitalik and his ability to be kind of objective and inclusive and fostering kind of a vibrant developer community. So those are some of the things I think about when it comes to team. When it comes to product, I maybe take a slightly different approach than traditional VCs, where I'm really thinking about like what are the problems that the existing crypto community has right now. I think it's seductive to think about, blockchain applications in insurance or in supply chain or things like this that have huge markets, and those are things that I think some VCs tend to get really excited about. But to me, I'm more excited about projects that are solving problems for the existing crypto community, with the idea that that community is just going to grow over time because of the macro environment and kind of the long-term macro trend of people gravitating away from kind of traditional institutions and more towards decentralized systems. So I'm talking to developers, I'm talking to like native crypto people, and also thinking for myself, because I am also a native crypto person, about what are the existing problems in the crypto community, and to me, if there are problems that keep coming up, then it's likely interesting from a product timing perspective. So team and product are the first two. I'd say the second two are kind of new to crypto investing, I would say. The third is community. And I kind of touched upon that already. Like the founding team needs to care about community and to kind of understand the ethos of blockchain and, in things like transparency and inclusion and inequality, and kind of valuing those things. For these projects to be massively successful, you need to have buy-in from a really global community. So, in some cases, there already are communities that exist, and you could look on, Reddit and track, activity on Reddit and subscribers on Reddit and things like that. You also, can look at Rocket Chat and Slack and and Telegram and see activity on some of those messaging services. So that's one way to assess it kind of quantitatively if the project already exists. In some cases, it doesn't yet exist. There is no community, but you really have to assess the founding team and their ability to build one. So, again, team, product, community, and then the fourth is token mechanics. And so you really need all four to, for me to get excited about a project, and I think ultimately to be successful kind of in the long term. And when I talk about token mechanics, I mean, is there a need for this token, and what gives this token kind of long-term value? And different people have different kind of mental models for that, but the mental model is there's really kind of three types of interesting tokens. One is what I call a usage token, where ownership of the token is required to use some digital service. The second is what I call a work token, where ownership gives users the right to contribute work to some decentralized network. And then the third is a security token, which basically it's a token that represents some underlying assets. And so those are kind of the four things that I accept. I pretty religiously assess for every project that I'm looking at.
From what you've seen and what you've read, like what would you say are some of the areas or like products that haven't been built yet in the ecosystem, but you think should be built in this like next year?
There's a few that I'm very excited about, and there's certainly already projects that I've invested in even that are working on this, but I think not many of them are kind of in the wild yet. So one is this idea of a decentralized stablecoin. So a cryptocurrency that has the volatility characteristics similar to that of like a US dollar combined with the decentralization of something like Bitcoin or Ethereum. So, the existing cryptocurrencies that are widely known have a fixed supply. And so like Bitcoin has 21 million Bitcoin that will ever exist, and that will happen in the year of 2140. And, it has a money supply that's dictated by the code, but that money supply is kind of focused on digital scarcity, which for Bitcoin, I think is an interesting approach because Bitcoin is viewed as digital gold. And I think that is a great use case for Bitcoin. But I think for a cryptocurrency to be widely used, it has to have stability, and it has to really have a some type of mechanism that's able to achieve price stability, and that could be an algorithmic central bank, that could be a collateralized kind of debt system where there's underlying assets that back the stable coin, and those assets are locked up in smart contracts, things like that. I've invested in two of these projects, one called Maker, which is taking the kind of collateralized debt approach, and the other is called Basecoin, which is taking more of the algorithmic central bank approach. And I think these are really important kind of projects to achieve more usage of cryptocurrencies for payments and things like that.
And I'm curious, when you were fundraising for your venture fund, what was the feedback and reception that you got from your LPs? Was it easy? Was it easy to convince them? And how did you end up convincing the likes of even Mark Cuban to invest in your venture fund?
I would say in the past year, there's just been tremendous interest in cryptocurrencies. And as a result, it's a really good time to be raising money for a fund like mine. It frankly was a bit easier than I expected. Mark Cuban is someone that I have known for 4 or 5 years, just kind of via email. And when I decided to do the fund, he was kind of one of the first people I reached out to, and told him what I was doing, and he was interested, and ended up meeting with him and convinced him to invest. I think the combination of there being more interest in the space, prices of Bitcoin and Ether have gone up tremendously, and people all over the world are kind of taking notice of that, and so that has helped what I'm doing for sure. I think another is the fact that I have been deep in this space for the past 5 years. And so there's hundreds of fund managers now popping up that are trying to do funds, but there's not a ton of people that have been deep in the space like I have. And so kind of having historical context and being thoughtful kind of in my approach, I think helped.
And you wrote a Medium blog post, I think 6 months ago, talking about token value. With so many more tokens and ICOs popping up since then, I'm curious on your thoughts on what people should be looking for when evaluating these newer tokens and ICOs.
Even if you look at the top 10 tokens right now by total market value on coinmarketcap.com, I think there's 10 right now that have over 10 billion in total market value. There's really only a few of them that, if you assess them based on those kind of 4 fundamentals that I described, are exceptional. And so, I encourage people to think more about the fundamentals. Right now, how I like to describe it is there's something over 700 billion in mimetic value, which meaning all these cryptocurrencies are just kind of viewed as memes. All a meme is, memes are known as funny images that spread in online forums like Reddit or Twitter. But more broadly, a meme is an idea that spreads within a culture. And so right now, if you have a meme like Bitcoin, the meme is digital gold. It's a good meme, and that kind of meme is spreading like wildfire all over the world, right? And it's causing people to buy Bitcoin. Ripple is another good example. Like Ripple, XRP, the meme is this payment network that connects banks around the world. And that meme is resonating with people all over the world now, and is spreading. So, right now it's all mimetic value. I encourage people to kind of really look deeper at fundamentals. And I think if you look there, you may start to become a little more kind of disciplined about how you're investing in these crypto assets.
And in terms of important topics within the crypto and blockchain space that you think will be relevant this year, and in general, like things that you're excited about for 2018, what would you say are some of those?
Well, I think, scalability is one that I already mentioned. I think, scalability is one that I haven't mentioned. Stablecoins is one that I already mentioned. So scalability, is kind of a known problem in blockchains, right? There's limited capacity to process transactions on most blockchains right now. So Bitcoin can do 3 or 4 transactions per second. Ethereum can do kind of 14 or 15 transactions per second, which is far away from being able to to be a platform for widely used kind of consumer applications. And so, for example, Uber does something like a couple hundred transactions per second, and Visa, PayPal, MasterCard do thousands of transactions per second. So in terms of being able to scale, to kind of maintain performance as throughput increases, is really important. Probably the most important problem in blockchains right now. And there are a number of different approaches that I'm excited about that are solving this. And I think we're going to see some of those hopefully kind of come to fruition in 2018. So that's one kind of more technical thing to look out for that is not as sexy as, something like CryptoKitties or some new kind of consumer application, but I think is more important.
So what would you say are some of these like things that you're looking into when it comes to scalability?
I've actually just made an investment that's unannounced that we'll likely be announcing quite soon that is quite under the radar, but is taking kind of a different approach than anyone else really in solving kind of scalability problems. But the main kind of solutions that are known right now, one is things like Lightning Network and Raiden, which are vertical solutions that serve as kind of second layers on top of the existing blockchains. And so you have a layer 2 network where the transactions ultimately settle on the main chain, but not immediately and not individually. And so I think that both Lightning and Raiden, as well as Plasma, is taking a slightly different but similar approach. So that's kind of one category of scaling solutions, I would say. Another category is like new blockchains that are simply more inherently more scalable, and that's things like Cosmos and Dfinity and Tezos and new blockchains like that. And so I think ultimately we'll probably see a little bit of both work, and I think regardless, what gives me some confidence that something will work is there's so much interesting stuff going on.
Last two questions. What would you say is the best way for people who are interested in learning more in like investing in cryptocurrencies and learning more about the underlying tech as well to get started and get up to speed?
The most effective way is to dive in. Like cryptocurrencies is not a topic that you could just like, read once or twice a week, read a newsletter or something and understand it, right? It's incredibly complex, and you have to devote time and resources to diving into different subreddits, into different Rocket Chat and Slacks, and going direct from the source. So that's kind of the first thing I would say. There are, if you're doing that, there are certainly like newsletters like mine, The Control, and blogs like CoinDesk that I think put out kind of good information that helps you kind of stay up to date on what's going on in the space. But I think that can only supplement what the first priority should be if you're serious about learning, which is to dive into the different communities and kind of learn for yourself, ask questions for yourself, things like that.
Gotcha. That makes sense. And final question I had was, what would you say is an unusual habit that you have, or maybe like a weird practice that not many people know about?
One thing that I've become pretty religious about in the past year is lucid dreaming. So are you familiar with lucid dreaming at all? Okay. Lucid dreaming is basically being able to control your dreams. And it's been really helpful for me. Basically, I've trained myself to, in some cases, dream what I want to dream, and that enables me to do things like, dream about the meeting that I'm having tomorrow, and it's really a more vivid kind of form of visualization where, if I have a big meeting tomorrow, I can dream it and kind of practice, what I'm going to say and how the meeting's going to go. And then when I actually live it, I'm able to be kind of more effective in that meeting. And so, lucid dreaming, I think I feel pretty strongly is going to be really more popular in the coming years. I mean, it's crazy to me that we spend over a third of our lives sleeping and not getting much out of that sleep. And lucid dreaming allows you to actually be really productive when you sleep, which I find pretty interesting.
And back to our listeners, thank you very much for listening to another episode of The Block Crunch. If you haven't already, please follow me on Twitter at Mr. Jason Choi. That's MrJasonChoi, because I share the latest episodes and updates there. If you haven't, please also rate and subscribe on whatever platform you're listening to this on, because it does help us get this out to more people and help spread the crypto virus. Once again, I've been your host, Jason Choi, and I look forward to seeing you at our next episode.